Hey YouTubers, welcome back to my channel. So in today's video I'm going to be continuing this series that I started a few months ago where I invest £100 a month into the stock market and then show you exactly what I'm actually investing in. But as always, I have no financial background whatsoever, and so before investing in anything, I always recommend seeking professional financial advice. But hey, the advice I'm going to give you right now requires no financial advice whatsoever, and that's make sure you smash that like button and turn it blue so you can help the YouTube algorithm recommend this video to lots more people. Okay, so let's jump straight into the Trading 212 app. Now first of all, let's take a look at my portfolio from last month. Now first of all, you must be thinking why I've got £327.37 invested right now, as I should be more around the £300 mark. Now the reason for this is because I decided to buy one of the stocks that I wanted to invest in for this month a couple of days earlier, and I'll go into the reasons for why I did that later on in the video. But the stock that I actually decided to buy was Pfizer, and I bought that for £28.48. So taking that into consideration with what I have inside my portfolio, it looks pretty good because in the first time of this series, I've actually made a profit because last month I was at minus £2.89, whereas this month I made a profit of £4.57 as it stands right now of filming. Now one thing to note here is that the market is so volatile right now, because a couple of days ago when I did buy that stock in Pfizer, my whole portfolio was actually in the minus, and a couple of days later it's now in the positive. So there's a lot of ups and downs going right now, and this is the main reason why I decide to invest as a long-term investor, because over a long period of time I do feel that my investments will be going up gradually rather than going down. So let's jump into each of the stocks that I've bought so far. Let's have a look and see how they've been doing. AbbVie, one of the stocks that I bought last month, now we can see that that's gone up 6.7%. We've got Amazon, another stock that I bought recently, has gone up while looking at it right now, it just went up to 4.99%. Then we've got AT&T. Now clearly that hasn't done as well as some of the others, and it's actually dropped 6.66%. Now BP, this is one of the worst ones that I've bought, and in my other portfolio it's also doing terribly bad. And this is because it's taken a hit of 31.73%. Now at the end of the day, I still feel like BP is a great dividend stock to hold. Now at the same time, I also feel that BP over the next year or two will actually bounce back up. So as a long-term investment, I definitely want to keep it. But looking at how much is plummeting right now, it definitely makes me feel like I should jump ship and cash out. I don't want to have that fear of missing out when it does bounce back up and I lose a lot of money that I could have gained in that time period. So looking at the next one, we've got the iShares Core FTSE 100. We can see that that's gone up a little bit, 0.63%. Then we've got the iShares Core S&P 500, which has actually gone up 3.72%, which is a little bit better than the FTSE 100 index. Then obviously we've got the Pfizer stock that I bought a couple of days ago, and we'll talk about that later. But then as we see down here, Tesla, one of the greatest stocks that I bought. And in my other portfolio, I actually bought Tesla back last year when technically they were at an absolute discount price. But as you can see, since we bought this fractional share of Tesla, we've actually made 23.52%, which is a healthy profit. And I'm definitely going to want to buy more into Tesla and hold it for a long period of time, because I feel like they've got a lot of potential moving forward, especially in the EV market, but at the same time in the solar market as well. Okay, so today, again, with the £100 I'm investing in this month, I'm going to do the same thing that I always do in every month. I'm going to split that £100 into three ways: an index fund, a dividend stock, and then a company that I've been interested in, I've been following for a while. So I guess the first stock on the list is obviously Pfizer. Now I've been following Pfizer for a while now, and with UK going back into its second lockdown, it makes sense to invest more into pharmaceutical companies with a viable vaccine for this COVID-19. And to be honest with you, Pfizer actually looks quite promising in this front and is definitely a running contender. Now, if we look at Pfizer over the last year, we can actually see that they've pretty much recovered from the pandemic slump that they had back in March. Now, since then, they've pretty much recovered, as you can see here. And if we look at it over a max period of the whole time of Pfizer, we can see there's still growth opportunities for Pfizer to rise up to its pre-COVID highs. Now, Pfizer was my dividend stock for this month. Now, the reason I chose them is when we look down here at the dividend yield, it has a healthy 4.28%. Now, also at the same time, the PE ratio here is 14.83, which is actually lower than the industry in the market currently. Also, like any pharmaceutical company, they're working on a very healthy profit of 31.45%. However, they do have a pretty high debt to assets ratio. But this is quite common for a pharmaceutical company, as they spend a lot of money on research. But at the end of the day, they are operating with good profit margins, which means that they can afford their dividend yield as well. Now, the actual reason why I decided to buy Pfizer a few days earlier, because I wanted to catch buying a whole share of Pfizer just before the ex-dividend date. Now, I got this information obviously from my fellow YouTuber, Trading with CJ, and you can see his video up there in the top right-hand corner of this video. So as I said, I bought one share of Pfizer at £28.48. Now, this then means that I'm left with £71.52 to invest this month. So I plan to split that in two, so that I can invest more into one of my index funds and then also another portion into a stock that I find interesting and I've been following for a while. So this basically leaves me with £35.76 to invest in the last two portions of my investment for this month. So first of all, the index fund. Now, I don't have any intentions to buy any more index funds, so I want to stay within the two index funds that I currently hold, and that's the iShares Core FTSE 100 and the S&P 500. Now, in this instance, I just want to choose the one that I have less shares in, and I just want to build that up a little bit more. So in this instance, that'll be the S&P 500. So if I go into this, and in this instance, I want to buy £35.76 worth of iShares Core S&P 500. And as you can see here, if I review the order, this comes up to just about 1.335 numbers of shares, and I want to send that buy order. And so this will then get executed when the markets reopen. Now finally, let's take a look at a company that I have an interest in. Now this is actually one that I bought into on the very first episode that I did this trading £100 a month. However, I couldn't afford a whole share of that company, which was Apple. But I wanted to see what would happen at that point when Apple was doing their stock split, and to see if I would actually get 4 times worth the amount of fraction of a share that I owned. But because I didn't have a whole share of Apple, I actually ended up cashing out at the point when Apple did their stock split. And so I ended up losing my holdings in Apple completely on this account. Now, looking at how Apple has done this month, the stock value actually went down a little bit because after announcing the brand new phones this month, they then had some supply issues, which then meant that their stock prices started to fall a bit. But as you can see, they've started to rise again because Apple have decided to do another announcement this month, and this is mainly around their MacBook Pros. And the speculation is that they're going to be announcing their new silicon chips as well, which is going to be a huge turning point for one of the best computers out there in the market. This therefore makes me feel that Apple's share price will be going up in the near future. But history shows us that Apple has always been a great investment. And it's also one of the largest holdings that the investing guru Warren Buffett holds onto as well. So it's always a great idea to hold the same stocks that the #1 investing guru of the world holds as well. So in this instance, I'm going to go and buy £35.76 worth of Apple as well. So if I go into buy, go to value, £35.76, and then let's review the order and send the buy order. And that will execute once the market reopens again. So that's it for today's video. I hope you enjoyed it. And always, as I mentioned at the beginning, I have no financial background whatsoever, and what you've seen in this video is literally the type of investing that I'm doing myself. Now, before you go and invest in anything, I always recommend that you should go and seek some professional financial advice. But before you go and do that, if you haven't already, make sure you subscribe to the channel down below and hit the bell button so you get notified when the next video comes out. And as always, make sure that you like this video, comment down below and share with your friends and family. See you on the next video.